Hey everyone, it's Alissa Coram here, back with another video, and today we're going to be talking about the differences between swing trading and position trading, so that way you can perhaps figure out which one better fits your trading personality if you are still trying to figure that out. There's a couple of key differences, and we're going to walk through a trade, one stock, and maybe how you could have handled it differently if you were a swing trader or a position trader. So with swing trading and position trading, really the biggest key difference is time. That is going to dictate where you're getting in, where you're exiting. So for swing trading, you're using hard and fast rules, taking profits quickly, but also cutting losses quickly. With position trading, you're maybe gonna give it a little bit more room. You are gonna be adding into strength likely, taking profits into strength too, yes, but also giving stocks a little bit more room and using defensive sell signals as well, like a break of a moving average. There are also different market conditions that may benefit one trading style over another. So for example, swing trading, if conditions are very choppy, taking profits quickly is usually a really good way to go instead of giving stocks more room. Because if you're waiting for a breakout and trying to give a stock a little bit more breathing room, a lot of times it's going to eat into your profits and potentially put you in a position where you've round tripped your entire gain before taking any profits. Sometimes you can also turn a swing trade into a position trade. Now, what do I mean by that? Say you're starting off with a shorter term profit goal, but that trade is going very well. You could then opt to leave part of your position on and then start using more of those position trade rules to hang on to that final piece of the position. But only do this when you are up on a trade. You don't want to say, oh, I'm down 2, 3, 4, 5% on my swing trade, but now I'm just going to turn it into a position trade. You always want to do it from a position of strength, not change your rules when things start going the wrong way. So like I mentioned, the biggest difference here is time. So that is going to determine which moving averages that you use to help you buy and sell. 21-day most times, sometimes the 10-day maybe, but also using the 5-day moving average to look at sell signals as well. Whereas with position trading, you're looking at usually the 50-day or 10-week line. Sometimes the 21-day if it's a strong bull market or a very strong trade. And there could be times where you enter into a stock from a position trade standpoint around the 200-day. But let's now take a look at an example of how SwingTrader and Leaderboard handled AMD last fall differently. Same buy point, but it unfolded very differently for both styles. So let's do it. So here's a look at the current chart of AMD here. We're at the end of March, and now let's go back in time though so we can zoom in a little more closely. I have already put in the date of the 10th of January in here, but we're gonna take a look last fall. So AMD had this strong breakout from a cup with handle, then pulled back and set up again. Then it was late September, 9/27 to be exact, where both SwingTrader and Leaderboard took a trade in AMD. It was below average volume, but it was the highest volume in about a month, and there was a strong upside reversal right around all those moving averages, which converged, closed strong, and also cleared a couple of prior days of action there. So Leaderboard added this as a quarter position, but SwingTrader got shaken out the next day with the move lower, down about 6%, so undercutting the recent action. So that was definitely a quick sell signal for the SwingTrader team. But Leaderboard hung on to this trade because even though it tested prior lows, it held above that 99.51 low from the double bottom by I think about 30 cents or so. So it did not undercut that significant low, keeping Leaderboard in the trade. So fast forward a little later, and on October 7th, AMD was able to get back above its 50-day line, and this is where Leaderboard added to the existing position, so raised the quarter position to a half, and SwingTrader got back in there. and took a trade here. So this goes to show you, if you get shaken out, don't be afraid to get back in if you see another good setup with a trade. Then you go ahead a couple of sessions, and SwingTrader was taking profits into this strength on the 14th and the 19th here, so selling into that strength. And we also had Leaderboard raise the position to a full once it broke out of the double bottom. So whereas SwingTrader was selling into that strength, Leaderboard was adding on the breakout. And then coming up on October 22nd, that is where SwingTrader got completely out of the trade because earnings were in just 2 days and didn't want to take on that earnings risk. A lot of times we do not hold stocks into earnings with SwingTrader, given the shorter term time horizon that we have, wanting to take profits into strength, and so not wanting to be put into a position where you have that earnings risk on the table. But Leaderboard had that significant profit cushion, decided to hold into the earnings report, and the stock was able to find support at its 10-day line just a couple days later, so not triggering a sell signal there. But then when Leaderboard did decide to take profits was this downside reversal off of highs in November. That was another trim area, a close below the 21-day line as well. So taking profits into strength, but also selling when the profits were getting eaten into. But then we raised the position again on the 15th with this strong move off of the 50-day line. But then we scaled out again, getting out when it closed below the 50-day line, and then ultimately intraday getting completely out of it when it undercut the low from this upside reversal where we added. So that's how the trade played out for both SwingTrader and Leaderboard. So as you can see in action, things were very different whether you had a shorter term time horizon or a longer term time horizon as a position trader. With swing trading, got shaken out the first time, but Leaderboard held because it didn't close below that low. SwingTrader got back in, was taking profits into those strength, where Leaderboard was adding into that strength, and then seeing how it played out, finally using a decisive break of the 10-week line as the ultimate exit for Leaderboard. So I hope that was helpful to walk you through a real example of how you can approach swing trading and position trading, and ultimately find out what works best for your personality, but also have the willingness to be flexible too, because market environment may have a big impact on how you handle positions, and you may need to sort of roll with the punches on that front in order to figure out how you're able to maximize your profits. So tell me, are you more of a swing trader or a position trader? Do you try to do a little bit of both? Let me know in the comments, and as always, be sure to subscribe to my channel so you can stay up to date on all the latest videos, and make sure you check out my library of content. I have a lot of other videos that you might like, whether it's how to size positions, how to manage risk using early entries, and a lot of great interviews with expert traders as well. So check all of that out, and I will see you next time.